Hey everyone, and welcome back. Today, we are diving headfirst into one of the most talked about, most explosive, and honestly, most misunderstood corners of the market, 0DTE options. We're going to peel back the curtain of chaos and uncover a fascinating, institutional-grade strategy that's all about finding a repeatable edge in those wild final hours of the trading day.
All right, but before we get into the good stuff, we have to do the important part. Look, everything we're about to discuss is for educational and informational purposes, period. This is absolutely not financial advice. Trading options, and especially these 0DTEs, carries a massive amount of risk. You really can lose your entire investment, so please be careful and know what you're doing.
So let's just get right to the elephant in the room, the big question that's on everybody's mind. Are these 0 days to expiration options just glorified lottery tickets? A form of high-stakes gambling? You know, for a lot of people out there, that's exactly what they are. But what if I told you there's a completely different way to look at them?
Okay, just to make sure we're all on the same page here, let's do a super quick definition. 0DTE options are exactly what they sound like. They're options contracts that expire the very same day you trade them. And for something like the QQQ, which tracks the big tech stocks in the NASDAQ 100, these are available every single trading day. That creates a really unique and fast-paced environment.
And this is really where we see two totally different worlds collide. On one side, you have the typical retail approach, which honestly is pure gambling. It's buying cheap calls or puts based on a hunch, just hoping for a miracle. It leads to super emotional decisions and, more often than not, really rapid losses. But on the other side, you have the institutional approach. It's systematic, it's patient. It's about waiting for a very specific, high-probability setup to come to you.
So, what is this institutional secret? What's the hidden edge they're using? Well, it all comes down to a powerful force that takes over the market in the afternoon. It acts like a giant financial magnet, and it's a phenomenon called gamma pinning.
So what in the world is gamma pinning? Well, imagine the market makers, the big institutions that sell all these options. When they sell a massive, and I mean massive, amount of contracts at one specific strike price, they have to protect themselves. So as expiration gets closer, they're forced to constantly buy and sell the underlying stock to manage their risk. And all of that buying and selling activity, it literally creates a gravitational pull, dragging the stock's price right toward that one specific strike price as we get closer to the 4 p.m. bell.
And you know what the best part is? This magnet isn't some deep, dark secret. You can actually find it yourself every single morning with just a few simple steps. Before the market even opens, you just look at the QQQ options chain. You scan for the strike price that has that giant mountain of open interest. You just double-check that it's way bigger, like 1.5 to 2 times bigger than the strikes around it. And boom, that's your price magnet for the day.
Now, finding the magnet is one thing, but timing. Timing is everything. This magnetic force isn't just switched on at 9:30 a.m. In fact, the morning is what you'd call a discovery phase. The price is just wandering around, doing its thing. But as the hours tick by, that gravitational pull gets stronger and stronger. The key takeaway here is this active pin phase. That window between 2 p.m. and 3:30 p.m. That is your golden hour. That's when this strategy truly comes to life.
All right, so we've found the where, that's the magnet, and we've found the when, that afternoon trading window. So now let's build this into an actual high-probability setup. Because it's not just about the pin itself, it's about stacking the odds in your favor by combining factors. It's a concept traders call Confluence.
A really powerful A-plus setup needs 3 keys to unlock it, like a combination lock. First, you need the magnet, a super clear, obvious pin strike. Second, you need the zone. This is a key technical level, like an order block that's sitting right near your pin. Think of it like footprints left behind by big money. It's a price area where institutions have shown huge interest before. And third, you need the clock. Your entry has to happen inside that 2 to 3:30 p.m. power hour. When all 3 line up, that's your signal.
Okay, theory is great, but let's look at how this works in the real world. Check this out. On this day, the magnet was locked in at the $385 strike. And guess what? There was a known institutional support zone, an order block, right below it at 384.20. Now look at the clock. At 2:28 p.m., smack in the middle of our active window, the price dipped right into that zone. That was the entry signal. Buying the 385 calls, betting that the magnet would pull the price right back up. And wow, did it ever. The result was a 138% gain in just 47 minutes.
So let's bring it all home now. The real takeaway here, the big idea, is about completely shifting your approach to trading these things. It's about moving away from random bets and gut feelings and instead executing a structured, repeatable plan based on market mechanics that you can actually see and measure.
So what happens when you get that perfect storm, when the magnet, the zone, and the clock all align and scream go at the same time? Well, the source material for this strategy reports a potential win rate in the neighborhood of 70 to 80%. Now, look, of course, nothing in trading is ever a guarantee. But a number like that, it really shows you the incredible power of being patient and waiting for that true A-plus setup.
And at the end of the day, it all comes down to a fundamental shift in your mindset. I mean, it's night and day, right? The gambler runs on hope, FOMO, and emotional, random clicks. The systematic trader, on the other hand, operates with a checklist. They've identified the pin, they found their zone, they wait for the clock, and they execute with a crystal clear plan for their entry, their exit, and their risk. It's a business, not a casino.
You know, I think this quote from the source material just says it all. I'm going to read it because it's perfect. This isn't gambling on 0DTE lottery tickets. This is systematic, high-probability options trading using institutional mechanics. You're not guessing, you're not hoping, you're using a framework built on the very physics of the market that the big institutions use every single day.
So I'll leave you with this question to think about. That final hour of the trading day is often seen as the most chaotic, the most random. But now that you've had a peek inside the professional's playbook, how are you going to approach the closing bell? Hey, if you got some real value from this breakdown, do me a huge favor and hit that like button. And make sure you subscribe to the channel, Elite Trade Radar, and share this with a friend who might need to see it. Thanks for watching, and we'll see you in the next one.